So the London Stock Exchange Group, which is owned by, I think, Steve and neither of the rest of us. But I am an avid follower of this stock. For reasons I'll tell you about in a moment, released its, I think, half-yearly earnings. Right. So being a UK company would tend to release them every 6 months rather than every 3. And the results seem to be pretty good, and this might be a turning point for me on this stock, which is why I'm following this with some interest. So the London Stock Exchange Group, just for those who haven't heard us banging on about it before, you tend to think of that as the kind of platform on which, I guess, Ftse stocks are traded and invested in and so on and so forth. If you think that's what they do, you'd be correct, but it's not most of it. Most of what they do is data and analytics because they've acquired a company called Refinitiv. So when we're talking about earnings and stuff and we say, oh, it was higher than Wall Street's expectations or lower than Wall Street's expectations or was a beat or a miss or whatever, it's usually Refinitiv that we're getting that data from. And that makes up about 68% of their kind of total revenues. And that grew at about 9%. Capital markets, which is the sort of tradey stuff, grew around 17%, and their kind of post-trade clearing stuff grew at about 8%. So profits are up this year, 21% to about £1 billion. They're launching a buyback for £750 million or so. They have a market cap of 45.5 billion, so they're buying back 1 and a bit percent of that. And the dividends increased to 31.7p a share. That's the smaller of their 2 dividends because they're a UK stock, so they pay a little dividend and a big dividend for reasons that I don't fully understand. Share price is 84.50, so that's about 0.3%, plus you'll get the bigger one, which about sort of twice that. So the dividend's probably looking at about 1%, I would guess. Steve, anything jump out at you from there? You own this stock.
Only that, when I had a brief look over the earnings, I sent you 2 things out of it, Steve, which was that dividend up and buyback, so Paul's going to absolutely love it. But the other things I saw was that only 2 of their 4 acquisitions they've made have actually gone through, so there is a couple more that are still yet to go through. So, you know, you can run the risk of thinking you've made 4 acquisitions, so looking at these earnings, they're probably just all sort of like been sort of like helped along by, you know, essentially merging those businesses in. But they mentioned that there was quite strong organic growth in the earnings, and again, two acquisitions still got to go through. So they look strong to me. They always look strong, to be fair. They've mentioned that they're starting to realise the savings and that Refinitiv is bringing to the business, and I just think it's a really good stock. I think if people want to hear more about LSEG, then we've done a deep dive on it. All of that information is still relative, and that's where I would go to check it out. It's a good place to start.
When did we talk about that? Was that in May or was it January? I can't remember. Something like that.
It doesn't give us
I'm
many
kind of
options,
looking at it now.
Paul.
I think it was...
It doesn't matter. It doesn't matter. It's up 19% year to date, 17% on the last 6 months, and we've talked about it in the last 6 months.
Yeah.
So you obviously made quite a big call on that one, and that's done very well for you since we last.
I remember it being the middle of winter that we talked about it. It was around the time that we were annoying Pete from Meaningful Money by talking about how old he is, even though that wasn't actually us. But that's how I kind of anchor that in my head. I've always struggled on this stock for what it's worth, and so I think I might be starting to unstruggle a little bit here. So their last year's accounts look a bit weird because of that Refinitiv acquisition, and I was trying to figure out what was what and what wasn't what amongst them, and I never really managed to kind of work out what I think earnings and free cash flow looked like in a normal year for this company now, because you look back before and it's kind of irrelevant because they're a different animal having made that multi-billion acquisition. So I think this kind of helps me settle down a little bit, and I kind of have them priced at about right here. It sort of depends a little bit. They're a really nice asset-light business again. They don't need more staff to grow. They're pretty mission critical. They're well entrenched in a load of stuff. The price feels about right to me here. Don't be surprised if I've bought this by this time next week.
Yeah, and I'm just reading here, CEO David Schwimmer. So Ross Geller is the CEO, so that's worth a buy, right? More than anything. Real interesting stuff. And I must admit, I didn't look any further when we last talked about it, and I'm gutted because it's probably up 19% since you last talked about it. That would have been a good winner, plus dividends as well, I'm guessing.